what's the sense of talking to management? I mean, basically, if you talk to management of almost every company, they'll say they think their stock's a wonderful buy, and they'll give you all the good stuff and skip over things that it just doesn't make any difference. Now, if I thought the company was worth 40 billion and had been selling for 35 billion, then at that point you have to start trying to refine your analysis more. But there's no reason to refine your analysis. I mean, I didn't need to know whether it was worth 97 billion or 103 billion if I was buying it at 35 billion. So any further refining of analysis would be a waste of time when what I should be doing is buying the stock. So we really like things that you don't have to carry out to 3 decimal places. If you have to carry it out to 3 decimal places, it's not a good idea. It was something like PetroChina. It's like if somebody walked in the door here and they weighed somewhere between 300 and 350 pounds. I might not know how much they weigh, but I would know they were fat. That's all I'm looking for, is something that's financially fat. And whether PetroChina weighed $95 billion or $105 billion didn't make much difference. It was selling for $35 billion. If it had been selling for 90, it would have made a difference. So if you can't make a decision on something like PetroChina off the figures, forget about going further. And that's basically what we did. It's a straightforward report, just like reading just like reading Chevron's or ConocoPhillips or anything like that, just as informative. We're going to learn more, by going out and deciding whether you thought they've got one huge field in China, whether the life of it was 13 years or 14 years or something of the sort. They should hit you between the eyes. Charlie?
Yeah, I would argue that we have lower due diligence expenses than anybody else in America, and that we have had less trouble because we had less expense. I know of an investment operation in America that pays over $200 billion a year to its...
200 million.
200
million.
Yes,
Yeah.
200 million, pardon me, to every year to its accountants, a lot to help them with due diligence. And I think our operation is safer because we think like engineers. We want these margins of reliability, and they're trying to do something really difficult, which is to have fine-grained.
When we get a call on something like the Mars-Wrigley situation, if we don't know enough about Mars and Wrigley by this point, so that we have to go out, I still like to go out, and of course, and sample all the bars. So we have a 15. I mean, I feel I owe that to the Berkshire shareholders, but I'm not going to look at their labor contracts or their leases or anything like that. If the value of Wrigley depends on a specific lease someplace or a specific commitment to this or that, or a given environmental problem, forget it. There are these overriding considerations that are enormously important, and then there's a whole lot of trivia that doesn't mean anything. That we have never made we've made plenty of big investment. I've made plenty of big investment mistakes. I've never made one, in my view, that would have been avoided by conventional due diligence. And we would have spent a lot of money, and we would have wasted a lot of time, and in some cases we would have missed deals simply because we wouldn't have committed fast enough. We have a significant advantage, and it gets bigger as we get bigger, because in terms of big deals, people rely more and more often on process, in that when people want to get a deal done and they want to know it's going to be done, they will come to us. I mean, the Mars people wanted to deal in terms of this financing aspect of the Wrigley situation. They only wanted to deal with Berkshire, and because they knew we didn't have any lawyers involved. I'll admit to this group, we didn't even have any directors involved. We just, we got a call, it made sense, and we said yes. And when we say yes, we don't say yes with a material adverse change clause. We don't say yes if financing is available. We just say yes. So I can tell people when we make a deal that if we're going to have $6.5 billion available, it's going to be available, whether there's a nuclear bomb goes off in New York City, or whether there's a flu epidemic, or whether Ben Bernanke runs off to South America with Paris Hilton. The check is going to clear. And if you're making a deal, the guy that wants the $6.5 billion, that assurance is worth something. And you really can't get anyplace else. You say, well, I'll do it, but I've got to have I have a due diligence team check this out and do all of that. So it's a real advantage to us, and I don't think there's any disadvantage to us. Number 10.
Hi, Mr. Buffett. My name is Matthew Millard. I'm from Norman, Oklahoma. And
we'll forgive that as Nebraskans.
That's okay. Thank you. I've been a long-time Berkshire shareholder since I was 16. Really like the company. Really like your investment style. Buy and hold forever, kind of beyond the grave. But my question actually had to do with, do you know and believe in Jesus Christ and have a personal relationship with him?
No, I'm an agnostic, and I grew up in a religious household. And if you'd asked that question to my mother or father, you'd have gotten a different answer. But and I'm a true agnostic. I'm not closer to either a theist or an atheist. I simply don't know, and maybe someday I'll know, and maybe someday I won't. But that's the nature of being an. Charlie?
I don't want to talk about my religion.
Okay, well. Being an agnostic, I don't have to talk about my religion. They're very simple. Obviously, I have no opinion on anybody else's religion because that's the nature of being an agnostic. So I wish everybody well in their own. Number 11. Actually, Richard Branson came over to this country. You know, they say that a brand is a promise. I mean, there's a promise involved in picking up a Milky Way or picking up a Coca-Cola as to what it's going to deliver to you. Richard Branson came over 7 or 8 years ago, 10 years ago, you know, a fellow with a famous airline and all of that. And he came out with something called Virgin Cola. Now, I thought that was kind of an unusual promise to have in a product. Never could quite figure that one out, what the promise was. But whatever it was, it didn't work. And there've been, I don't know how many Don Keogh would know, but there've been hundreds of colas over the years. But in the end, who is going to buy some substitute cola for a penny a can less, or 2 cents a can less than Coca-Cola, or the same thing with See's Candy, or the same thing with Kool-Aid, or whatever it may be. So we feel pretty good about branded products when they're runaway leaders in their field. And there's nothing unusual about Kraft in their position versus Kellogg or some other people like that. So the specifics of which one we buy may depend a little bit on how we feel about the price. It certainly will make a difference how we feel about the price, the management, and some other factors. But if you buy in with good branded products and you don't pay too much, you're probably going to do okay. On the other hand, you're not going to get super rich because the attributes that I've just laid out are pretty well recognized. Charlie?
I've got nothing to add.
Okay. Do we need to go to the other room or not?